China's economic landscape is undergoing a significant shift, with a complex interplay of factors influencing its consumer and producer prices. The battle against deflation seems to be gaining ground, but the road ahead is far from smooth. In October, China witnessed a glimmer of hope as consumer prices rebounded, putting an end to 2 consecutive months of decline. This positive development was accompanied by a continued slump in producer prices, extending their negative trajectory for a third year. The world's second-largest economy is grappling with weak domestic demand and a decline in exports, creating a challenging environment. The National Bureau of Statistics data revealed a consumer price index of 0.2% for October, surpassing analysts' expectations of zero growth. This growth follows a more significant than expected drop of 0.3% in September. On a month-on-month basis, consumer prices also rose by 0.2%, contrary to analysts' predictions of flat growth. However, the producer price index painted a different picture, with prices falling 2.1% year-on-year, slightly better than the estimated 2.2% decline. This decline has persisted for 3 years, a worrying trend that has prompted government intervention due to fierce price wars and industrial overcapacity. Dong Lijuan, chief statistician at the Urban Division of the National Bureau of Statistics, attributed the positive consumer price growth to effective policies aimed at expanding domestic demand and the boost from national holidays. While these measures seem to be bearing fruit, with industrial profits surging more than 21% in September, experts caution that the situation is far from stable. The dependence of local governments on tax revenue encourages sustained production, leading to intensified competition and overcapacity. This issue persists until meaningful tax reforms are implemented. Additionally, China's manufacturing activity in October contracted more than expected, reaching its lowest level in 6 months, according to an official survey. Trade tensions with the U.S. and weak consumer confidence at home have created an environment of uncertainty for Chinese producers. The country's exports unexpectedly contracted in October, with shipments to the U.S. experiencing double-digit declines for a 7th consecutive month, down 25%. But here's where it gets controversial. The recent trade truce between U.S. President Donald Trump and Chinese leader Xi Jinping during their meeting in South Korea could potentially alleviate export headwinds. This agreement diffuses tensions and reduces the risk of a full-blown trade war, which could provide a much-needed boost to China's export sector. China's leadership has vowed to prioritize domestic consumption, as outlined in their economic roadmap for the next 5 years. The leaders emphasized the need to vigorously boost consumption while balancing it with effective investment and adhering to the strategic focus of expanding domestic demand. As China navigates these economic challenges, the question remains, can the country sustain its economic growth and address the issues of overcapacity and weak demand? The future of China's economy is a topic that invites discussion and differing opinions. What are your thoughts on China's economic strategies and their potential impact on global markets? Feel free to share your insights in the comments below.